Okay everyone, welcome back to the channel. So in this video, I'm going to be going over a specific entry model that I use. I call it the B.O.L.T Breakout Blueprint. And it uses price action with order flow to help you refine your entries. So I'm just going to be breaking that down now. So on Friday, the 17th, I took a long trade, just over $1,000. And I want to explain how I did that using a simple price imbalance and order flow entry. So if you're not aware of how I enter, I use something called the B.O.L.T Breakout Blueprint. And so I'm going to be talking about that in this video. So the B.O.L.T Breakout Blueprint simply means you want to look for a break, optimal retest. You then want to look for a liquidity absorption, and we're going to talk about how to use liquidity the right way. Liquidity absorption, if I spell that. And the final thing is you want to pull the trigger. So once you've seen a break, optimal retest, liquidity absorption, then you have to pull the trigger. And so when you use all four of these, you end up catching good trades. And so I'm going to break down exactly how I did that. So on Friday, what happened was, so coming into the pre-market plan, I had my pre-market plan was of course bullish. I didn't want to fight the trend. So what I was looking for here, this was roughly 10 a.m. Eastern. So what happened is we had the 15-minute opening range, and I had tapped into one of my key levels. So I'm going to break down what I mean by that. So before the market opened, let's just go back to market open. So every single time I place a trade, I always look for my pre-market game plan, right? This is very, very important. So going into the pre-market game plan, so this was now 9:30 Eastern. So going into 9:30 Eastern, I was watching this candle over here, right? This one right here. Now the reason why is because there was a price imbalance that was delivered, right? So the price imbalance for me would be between this red line and this red line, right? These two red lines indicate a price imbalance, right? Because this wick and this wick don't touch. And so because of that, we have this price imbalance like this. So this price imbalance is where I'm interested in potentially trading away from. So my goals for Friday was just to take longs. I didn't want to take shorts because we were so close to the all-time highs. So having said that, my key level was specifically this area here. So 71.20 to 71.06. And so it looks something like this. I used this candle like this. That's all I did, right? So I look for a 15-minute price imbalance or a 15-minute fair value gap, and I simply trade away from it, right? That's how simple the execution, or that's how simple the trade plan was. It was not more complicated than that, right? Now from here, right, going into, I actually missed the move, right? So on Friday, I missed the move. So this was the initial move like this. So if I go down now to the 1 minute time frame, this was the first move you could have taken. So on a 1 minute time frame, what I look for specifically, right? So if you're struggling on the lower time frames to get good entries, you should start thinking things through in terms of frameworks. And so what I mean is you want to have a 15-minute price imbalance. That's the first thing. Price imbalance or /FEG. You want to have that. The second thing is you want to wait for the 15-minute orb. You want to wait for the 15-minute orb, right? You have to wait for this first 15 minutes. Now, my trick with trading the orb is you want to be trading or taking a long, ideally when price is above the orb, right? This is something I've noticed from my own trading and my own journaling. The best bullish setups will come above the orb, and vice versa. The best bearish setups will come below the orb, right? So my pre-market plan, if I talk you through kind of how I was looking to trade, my pre-market plan was something like this. So my ES levels, well, there wasn't really much to choose from because we had rallied so much higher. But the main thing to understand, if we just take a look at this from, let's take a look at this from a just a 15-minute chart perspective. This is what my chart looked like pre-market. And so yes, we had rallied significantly above all-time highs. We had this price imbalance here. I was looking for a break and retest from this level. And so the way I do that typically, for me to take a break and retest, price has to confirm it with the order flow. So it doesn't matter how you trade, you need to use the order flow to back up all of your levels. If you're not doing that, then you are guessing and gambling more so than trying to actually predict. So what happens here is when you have such a big zone like this, you have to use order flow in a break and retest manner, or the B.O.L.T breakout blueprint, something I'm going to break down. And so we can either have longs to the upside or of course breaks to the downside. And so I did have my potential. I did have my eye on shorts at the start of the market. However, I was a little bit hesitant to take them because I didn't want to fight the trend, right? So I really just wanted to take longs. However, we had a key level here from Thursday, and this was the POC from Thursday. And so the point of control from Thursday can be an area to target. However, it just didn't happen, right? So for those who wonder how can you actually form a bias that keeps you on the right side of the market, once you do your pre-market plan, you have to revert to order flow to make it work, right? There's no other way you can do it. So from here now, this was where we were at 10 a.m. Eastern or 10:15 Eastern. So what had happened is now we had seen price breaking above the 15-minute high. So we have a 15-minute price imbalance. We see the 15-minute opening range breakout. And the third thing is I look for, this is what the point of the video is, the B.O.L.T breakout. And so the B.O.L.T breakout is an acronym that I've created recently to help traders understand how I trade, right? So what B.O.L.T stands for, once again, is break, optimal retest, liquidity absorption, and then we pull the trigger. So we're going to be focusing specifically on the B.O.L.T breakout blueprint. So just for those who don't understand how I got this level, so this was based off a 5-minute imbalance, right? So your key levels can be different to mine, and mine can be different to yours. It's not about who has the most accurate key level. It's about following the same process every time to find your levels and then using order flow to confirm those levels, right? So this is all about using order flow to confirm your levels. So I found this level in the same sort of way. So if we just start off by getting rid of this, what we saw was this was the price imbalance, right? There was the price imbalance right there. And so what I do is I choose the candle before the price imbalance. So I will choose this as my level. So my levels are typically in gray, just so they remain different to the price imbalance. And so when price comes into my key level, I'm only expecting one of two things. Either we can, in this case, follow the trend, or if we had some kind of a confirmation, we would take shorts. So by having a key level at the right place, it helps you prevents overtrading, over risking, FOMOing into trades, rushing into positions. If you just wait for the market to give you confirmation here, it saves you a lot of losses. And that's what I want to kind of highlight in this video. Now from here, if we just take a look at the entry, let's go to the entry side of things, right? So again, just a couple of notes. So I didn't want to fight the trend because the day before I lost $400 by fighting the trend. And so a couple of things you want to know is you want to use the B.O.L.T breakout blueprint to confirm your levels after you've read the order flow. So we read the order flow and then we use the breakout confirmation to get us long or short. That's the only way that you want to be trading. So again, this was posted at probably around 10 a.m. Eastern or 9:45 Eastern. Here was my level and here was a level down here. So I'm looking for a B.O.L.T breakout blueprint either to the upside or the downside. It's that simple. Okay, now from here, let's see what my entry was. So my entry off this sort of level here came at 71.50 or 71.51, right? 71.51. So let's break down what we saw. So from a candlestick perspective, let's really break this down. So first, we're looking for a break. So for those who don't understand, right, let's first write this down. So what does B.O.L.T stand for? So B-O.L.T. And so if you're struggling with any part of your trading, I strongly recommend building some kind of acronym around that part of your trading so you can think about it systematically, because the systematic traders are the ones that beat the non-systematic traders, right? Trading is a process. It's a repeatable system. It's something you want to approach in the same way every single day to get the highest amount of results. So once you combine a repeatable system with order flow and key levels, it's as if by magic your psychology won't affect you. So your psychology is a function of poor technicals. I'm going to write that down just so you can see, right? So psychology issues. Psychology issues are a function of poorly defined technicals, right? So however you spell that, technicals, right? So your psychology is down to not having a proper strategy, basically, right? That's all it comes down to. So when you're looking at breakouts specifically, what you want to look for is a break. That's the first thing, break. And so we had a break above this level. So this is where on school I started to pay attention. This is where I started to pay attention. So we had a break above here, and I started to pay attention. So that's the first thing, right? So first we've had a break. Now, after you've had a break, you want to see an optimal retest. And so I get a lot of questions about what do I mean by an optimal retest? This is the O. So break, optimal retest. So for me to see an optimal retest, I'm typically looking at one or two things. I'd like to see at least one tap into my zone. So this here is the optimal retest. So this is step one, the break. So let's label that. Here's step one. This is the break. Now, to see the optimal retest, right, for me, this entire region here would be the optimal retest. Now, why is that the optimal retest? So there's two things that make a break, and there's two things that make an optimal retest. For me to see a break, I would ideally want to see a candle closure. A candle closure. I want to see a candle closure outside of my zone. Whether it's bearish or bullish, I'd like to see a candle closure. Now, it's important to note that candle closures alone are not enough. You cannot trade price by trying to predict candles, right? If you're predicting candles, you're guessing and gambling. What you want to do is move away from that, and you want to start reading the market for what it is. And the market isn't about candles, EMAs, Elliott waves, RSIs. It's not about any of that. It's about choosing the right level and reading price at that level. If you can do that, you can win on a long enough time horizon. So when you're looking at candle closures specifically, always look at them in an educated way, right? Don't be an uneducated trader who doesn't know how to read order flow. Now, specifically with this, there's no candle pattern here, or there's no real confirmation that can give you entry to go long or short. There's none. Instead, you want to start focusing on an optimal retest. And so an optimal retest, right, comes down to two things. I want to see at least two taps into the zone, right? At least two taps into the zone. So here we had one just about, and here we had two. And the second thing is I want to see price coming at least 50% into the zone. So I think the ICT traders have a term for this, which I can't remember off the top of my head. It doesn't really matter. 50% of the level needs to be hit. So here we had a little bit, I know it's a little bit less than 50%. However, I will show you why I still went long. But you want to have around or at least 50% of the level being mitigated. 50% mitigation of the level, right? So in other words, you want to see price coming into the level a significant amount, at least twice, right? And once you've seen those two things, you then want to move on to the L step, which is the most important. So if you miss out L, you lose. So just remember, L here stands for I need it to win. So the opposite of loss. In order to win, you need the L. So what L stands for is liquidity absorption. And so this is one of the most interesting things, right? So I know the word liquidity is used a lot in the space, right? So many traders will refer to liquidity: previous day highs, previous day lows, previous week highs, previous week lows, monthly highs, monthly lows, session highs, session lows. The truth is you cannot read liquidity just by looking at candles. You think you can, but you can't. And the way I like to think about it is that with liquidity, or with the markets in general, you need an edge beyond most. So for example, if 90% of traders are looking at the previous day high or the previous day low, or whatever it is, if 90% of traders are focusing on session highs and session lows, then why would you focus on it? Not because those are necessarily bad concepts or they don't work. Sure, they can be of use. But if you're looking to enter, so this video is specifically on entries. I'm using the B.O.L.T Breakout Blueprint, right? The B.O.L.T Breakout Blueprint is typically on your execution time frame. So for me, that's going to be the 1 minute time frame. It does apply to the 3 minute time frame, the 5 minute time frame. And it does apply to any market that you look at, right? You cannot read liquidity or observe liquidity without using footprint charts. Ever. Okay, so what liquidity absorption really stands for is this part here. So this is the first tap into the zone. This is that first little wick going into the zone like this. So let's break this one down. So when we first enter the zone like this, right, what did we see here, right? What was going on here, right? I understand the numbers are fuzzy. Let's go to here. Here we have a clean screenshot of what was going on. So yes, my entry came at 71.51. But what was going on over here, right? So when it comes to liquidity, the correct way to look at liquidity is basically who is aggressive, right? Who is aggressive, right? Is there more sell orders here or more buy orders? So this is the first tap over here. So let's break this one down. Here's the first tap here there. So what was going on in this first tap? So what do you see from the footprint chart? So this is where you need footprint charts, right? Need footprint charts. And if you don't have footprint charts here, it's a problem. So what you're looking for specifically on the footprint charts is you're looking for red delta. And red delta from the footprint charts basically refers to more aggressive sellers. And when you see more aggressive sellers, you want to look for follow-through, or more specifically, a lack of follow-through. Lack of follow-through. And we see that with the candles. So you want to use candles in conjunction with footprint charts. If you're just using candles, you're entering blind, it's not going to work on a long enough time horizon. So when you're looking here now, you can see all this red delta and we see this rejection higher. So what this means is there was an absorption of the liquidity. And so liquidity is only useful to you if you're using it for absorption. I'll repeat that. Liquidity is only useful to you if you're using it for absorption. So from here, we saw the following, right? This is the steps we saw. We saw lots of red delta, which means there's aggressive sellers, but they had no follow through, because if they had follow through, they would have broken below the zone, right? They broke above the zone. So that means that there was no follow through. So this is the recipe. This is the B.O.L.T breakout blueprint. This is how we confirm our entries. Okay. So that's where we had that, right? Now let's take a look at what was going on here, because this wick was very interesting. So if we just take a look at it from an execution standpoint, if we zoom out, let's take a look at this wick, right? This one right here. So if we go back to school, I took an image of this. There we go. So here was the execution. So execution at 71.51. We want to focus on this part here. So what was going on here? Let's dive into this wick, right? So this is the most fascinating thing about trading. This is my favorite part of trading. It's being able to look at a candle and dissect it into what the market is printing in real time. Because a candle by itself, by definition, a candle is just a picturesque version of what the markets are trying to do, right? Or what the markets have already done. But the reality is you can have a green candle like this, and inside the green candle is the story. So if you're not reading the story, or you don't at least understand the main characters, you can never understand the moral of the story. You can never really understand what's going on. And if you can't understand what's going on, then it's just a matter of time before you become like an ATM machine for those who do. So one thing I've often said is those who choose to trade without the order flow end up paying those who do on a long enough time horizon. Now that key is the long enough time horizon, because the market is at the end of the day buying or selling, so you can be rewarded for things that don't work. Now that's the biggest problem, is that the market rewards people who don't trade with the order flow, and that's one of the biggest problems. But when you have a sound understanding of order flow, and order flow isn't complicated, you literally need to read the delta, something which I call the delta, which I've made other videos about. But what you want to understand is that if you are trading key levels with price action, if you're actually trading price action, you have to read the price action. And reading the price action comes down to the bid and the ask, the delta, the aggression, and then you detect zeros. That's what read stands for. I've made separate videos on that. So if you look here, this was a green candle. Half of the candle was full of aggressive selling. So we had the same sort of idea over here now. So lots of red delta, especially in this wick, right? Lots of red delta, tons of aggressive sellers, and we had a lack of follow through, right? We had a lack of follow through, because if we had follow through, we would have broken below here. But the fact that we broke above here means that those sellers failed. This is what we call an absorption of liquidity, or liquidity absorption. So instead of thinking about it in terms of sweeps, you want to think about it in terms of absorption, because liquidity exists everywhere. So you want to define your level and look for specific areas of absorption based off those levels, right? You're not looking for sweeps, right? That's not valid. You're not looking for sweeps. You cannot trade sweeps because they exist everywhere by definition. This is a sweep, right? But what confirms a sweep? What really confirms a sweep is this. It's the inside of the candle that give you confidence, right? That's the only way to get around it. So this here And this here was the reason why step 4, once you have your liquidity absorption, you then want to pull the trigger, right? And pulling the trigger is important. So if you hesitate with trades, or you have a fear of loss, or you have a fear of, you know, getting in too early or getting in too late, it's because one of your processes are off. Either your levels off, your read of the market's off, you're not using footprint charts, you're not using a structured execution plan, something is off. So if you're not pulling the trigger after you've seen everything, either size down or try and understand where your levels are, right? That's the best way to go about it. So now from here, we've completed the B.O.L.T breakout blueprint. So we've gone through all 4 steps. Right, in real time, I was looking at all these steps, right? So I risked about 438 to make just over $1,000. I closed the trade a little bit early, and this was the trade itself, right? Just from a strategic perspective, right? So we had a 5-minute FEG or 5-minute key level. Here was a 15-minute orb. So we broke above the orb, we tapped into a key level, and this is where the B.O.L.T breakout execution blueprint came into play. So break, optimal retest, liquidity absorption, and then I pulled the trigger. So from an entry perspective, it looked something like this. So again, I speak about this in a lot of detail because this is the bread and butter of what we do at Price Action, what I do at Price Action Labs, right? So it's about understanding how the markets work. So it's important to get these 2 images next to each other, right? So reading market context is super important, right? Reading market context is super important, right? So specifically this wick over here, what you're seeing is that the market is absorbing sellers, right? So the liquidity is being absorbed, and that is when you pull the trigger. And so I pulled the trigger at somewhere around here. So I pulled the trigger at 71.51. So if we just go and put this on the charts, 71.51. So that was around 71.51. That was around here. So stops anywhere around here is fine. Risked about 400 to make 1,000. So about a 1 to 2 hour risk reward. And so the real question now comes down to understanding this, right? Where did I pull the trigger, right? This is a common question I get. So typically there's a few different ways you can do this. If you're more conservative, you can look at the top of the break. So this here was the break. This yellow box here was the break. This is step 1. And so with the break, you can enter all the way up here. That's perfectly fine, because if the market's going to move like it did, right? If we're going to have a decent move up like we did, then you can pull the trigger, right? You can afford to do that. However, I personally don't like to do that. I like to catch more of the move. And so what I will do is I will enter at the first candle that broke above the zone. So remember when I said you want a candle break? That candle there, right? This candle here gave the confirmation. This is the candle break. So I call this the break line, like this. There we go. So you can enter here if you want, right? You can enter here. This was at 49.5. So I entered at 51, so slightly above, but it's perfectly fine. Anywhere around here is fine. Now again, pulling the trigger, so you want to promise yourself this. Only execute and pull the trigger when the order flow tells you to, not when you think you should. So I want to leave you on that point. So this is the B.O.L.T breakout blueprint. This is basically how I time entries, right? So just to quickly sum it up, I wait for a break, which is this. I then wait for an optimal retest, which is this. I then wait for an absorption of liquidity, which is this, the most important thing. And then from here, I pull the trigger. And I'm happy to take the win or the loss as long as I followed the 4-step blueprint.